Welcome to Ahmedabad Management Association. Sorry for being about 5.5 minutes late, which we should not. But we are just, our honorable guests, we are just taking them a round of AMA Library and Japan Center, because some of them are coming for the first time. Welcome all of you. Some people more are joining. I am Padmin Buch. I am a chairman of Extension Services Committee, also member of Governing Council AMA. We all are part of the AMA family. And AMA has a tradition that any such program, one senior person, who may be a committee member, who may be committee chairman, it doesn't matter, will be there to coordinate the program. Okay, that's a tradition we follow, and we are really honored and happy for that. Today's program is really a game changer, as is the GIFT City itself. We have been hearing about GIFT City since long. I was earlier the managing director of JITCO, Gujarat Industrial and Technical Consult Organization. I have been close touch with the government at that time. And GIFT City was being envisaged at that time. I was part of the committees and deliberations. GIFT City was set up. Okay, no, actually it was set up by the 2000 Act, isn't it? By 2000 Act, GIFT City was set up. Okay. But then there was a lull. Here happens, everything doesn't happen as we wish. There was a lull, and we were wondering, kya hone wala hai? And fortunately, things have really moved. The gears are really started moving, and it is almost in the fifth gear. I would say, not a cruise, but not a cruise gear. It is galloping. Last week only I was there along with our AMA group. We visited GIFT City. Sandeep Bhai and Ramya were hosting us. We had such a nice interaction, and we realized how the things have changed. IFSC, no, the IFSC is a concept itself, is a unique concept, okay, and that is being backed up by all kind of, when we saw that Act is 2019, right? 2019 IFSC Act, it is solid thing which is happening. GIFT City is a world in Gujarat. The world is coming to Gujarat. There are so many, chartered accountants, they are all finance professionals. મને તો બહુ ઓછું આવડે છે ફાઇનાન્સમાં, એટલે હું બોલીશ નહીં તો આઈ વિલ ગેટ એક્સપોઝ. બટ આઈ નો અબાઉટ GIFT City, and I know the background, and I know the value of GIFT City. GIFT City and IFSC, Mr. Sandeep Bhai Shah is the head of that IFSC in GIFT City. They have brought the financial hub to India and Gujarat. The people who are operating there, some of them are already operating in GIFT City. They are not affected by the normal laws and acts of India. A separate domain has been created. And there are so many things going on. We have never heard of something like aircraft leasing, ship leasing, which is happening in GIFT City. All kind of alternative funds can be generated and operated in GIFT City. Because it is under a specialized act. You have to deal with in foreign currencies here. You cannot deal in rupee. But we have to go to Singapore or Hong Kong, which remain major hubs of financial hubs, apart from London and New York, of course. But now we have a GIFT City, IFSC, and as I said, the doors are really open, and things are going to move faster and faster. And that is why it is necessary to know what is happening. It is necessary to know what can be made use of, and that is why we have organized this particular panel discussion here. In fact, in AMA also, we have several diploma programs, and one of the program is in banking, another program is in finance. We like to incorporate a component of GIFT City, what GIFT City is doing, IFSC is doing, and later on maybe we will have some dedicated program also. Because the students or participants who are undergoing the AMA programs, they should not be left behind. When they go out of those 6 months, they should know what is happening. And GIFT City, we have to know about it. So I am happy that all of you are here. I welcome all of you, and I have a great honor in giving their introduction. Each of them are expert in their domain. Mr. Manish Mishra. Mr. Manish Mishra is an alumnus of IIT BHU and IIM Bangalore. He has been with ICICI Group for over 2 decades. Mr. Manish started his career in 1995 in investment banking and subsequently strategy consulting before joining ICICI Bank in 2002 in the International Banking Group. Over past 2 decades, he has handled multiple roles in the bank across remittances, NRI services, global markets, corporate banking. In the year 2014, he moved to ICICI Lombard, where he headed various business lines such as corporate, government, rural and international. He has recently taken over as the head of ICICI Bank's IFSC banking unit at the GIFT City, Gandhinagar. I would like to welcome him. Sorry. Mr. Apurva Vora. Right. He comes over with 38 years experience with last 27 years plus in financial services domain. He has worked across merchant banking, portfolio management, research, advisory and product management roles during this journey. Mr. Vora has started Finolutions, such a nice name, Finolutions, about 11 years back to work in the area of alternate investments, startups and fundraising. Academically, he is a graduate in commerce as well as law, a postgraduate diploma holder in computer science as well as taxation, an MBA, a certified wealth manager, a certified financial planner as well as certified alternative investment professional. He has assisted many alternative investment funds to raise capital through a network of wealth professionals across the country and globe as well. He is also operating from GIFT City, Gandhinagar now about since 2 years. Welcome, Mr. Apurva. Mr. Ambar Jain, right? He's a chartered accountant and finance enthusiast. I like that word. Enthusiasm is the key. He has worked in the credit vertical of HDFC Bank and Kotak Group. Mr. Jain now leads a pioneering vertical within the Elara Capital, a global conglomerate dedicated to debt syndication. Mr. Jain's mission is to provide timely and cost-effective capital solutions to small and medium enterprises as well as MSMEs across the various sectors. Elara Capital offers equity and debt fundraising, wealth management services, and strategic innovation. Okay. Dr. Tushar Deochekke, right? Yeah. He is a seasoned professional with 25 years of experience in real estate development, investment, REIT, equity research and consulting across India, Canada, UAE and USA. His impressive credentials include a senior executive leadership program from Harvard Business School, an MBA in finance, and a wealth of expertise in the real estate and financial sector. Connect with him in the country. That's what it is. So welcome. And last but not the least, the key person of today's program, Mr. Sandeep Shah. Mr. Sandeep Shah is head of IFFC department at GIFT, Gujarat International Finance City. And he has over 13 years of experience in project development, policy matters, and international finance services regulations. With a Bachelor of Commerce and Master of Business Administration, he has specialized in international finance and has worked with various organizations to promote IFFC globally. Mr. Sandeep has also contributed to the development of new business lines such as aircraft leasing, as I said, and offshore fund management. He has also worked with various committees to promote financial services. Right. Mr. Sandeep is also very much part of our AMA. He is a member of the committee. એ કે ફૂલની ગુચ્છી વધારે છે નહીં ને છે ના છે તો આપ ક્યાં ગયા તમારા બેટર આપ એમના બેટર આપ આવ્યા છે ત્યાં પાછળ બેઠા છે પણ કંટ્રોલ ત્યાંથી કરે છે આપ સંદીપભાઈને હું કે કંટ્રોલ નથી કરી શકતા કંટ્રોલ ત્યાંથી છે એમનો તમે એમને આપી દેજો બેમાંથી એક વસ્તુ થેન્ક યુ થેન્ક્સ ફોર કમિંગ વી રિયલી એપ્રિશિએટ પીપલ કમિંગ ઇન ધીસ મેનર ટુ AMA. ઓકે સંદીપભાઈ the domain is yours. We have I did not kill you, Sandeep. You already know. We are going to have a time limit up to that time, we will keep some margin for the question answer also, because that is so much necessary. Right?
Sure. Thank you very much. I think the combination of the speakers that we have got today on the panel, it cannot be better than that, because we have a banker who actually provides the funding, debt funding that Indian corporates need. We also have a kind of a wealth manager who actually interacts with the investors on a regular basis and understands the requirements of the investors for identifying the right projects. And we have Mr. Apurva Vora who will actually give us the perspective about what investors actually think before they make their investment plans. We also have Dr. Tushar basically who has actually created innovative financial instrument through which global investors can invest very efficiently and effectively in some of the projects. He will talk more about his new venture, which is more on the tokenization of the real estate, where the way we can buy the equity shares through a mutual fund units. I think he's bringing a concept where you and me can invest into a real estate project by investing through a tokenized assets. So he'll speak more on that basically, by which will help us to understand how can we create or raise fund by creating such innovative structures. And we also have Mr. Ambar, who works very closely with the MSMEs and SMEs, where he actually works to understand their requirements, because many times these traditional SMEs, they have a huge potential, but it is not documented well, and that's how many times the bankers or the lenders are not comfortable financing to some of these projects. And that's where the role of the kind of arranger comes into a play, where they help SMEs and MSMEs to create a structure in such a way that they talk in the language of bankers or the lenders, right? Probably idea of today's session is not to use the kind of terminologies, high terminologies, and confuse you in terms of how to raise capital and fund. But we will talk very simply and try to give you a perspective about how GIFT City can be utilized by the MSMEs, SMEs, or even if you are, say, an individual and looking to raise capital for some of your upcoming projects, or if you are a wealth manager and looking to raise money from the investors. There are different structures available today in the IFSC, and probably some or other way all of them are well connected with GIFT City, and they are actually doing business in GIFT City or with GIFT City, and that's where we will try to get some sense about their experience and about the fundraising that can happen from GIFT. GIFT City, as Padminji rightly mentioned, I think first of all let me tell you that it's a proud moment for all of us that India's first and maiden international financial services center is located in the state of Gujarat at GIFT City, and I think we all should take the full advantage, full proud of it, and see how we can be a part of that ecosystem as well. Lot of efforts have already been put in by Government of Gujarat and Government of India to ensure that India also becomes one of the leading financial center globally. Many a times, if you want to say manage a global fund, or if you want to make overseas investments, or say prior to 2015, if ICICI Bank wants to lend in foreign currency to the Indian corporates, they were not able to do it from their Indian branch, or you can't provide that services from India. And that's how many of the financial services have gone abroad. They have set up branches overseas. They have set up their office in Singapore, Dubai, or Hong Kong kind of centers. And through those centers, they were providing services to the requirements of the Indian corporates. In 2015, I think Government of India took a right decision and step to notify the International Financial Services Center at GIFT City, Gandhinagar, and that's where the journey started. Probably IFSC provides lots of business opportunities in various domains, but today's kind of agenda is to give you how do we connect to the capital and the fund which is already available globally, and how we can raise it efficiently from GIFT City. I think let's start with Manishji from you, because many a times from a layman or say even a MSME working, operating in say Ahmedabad or even in tier 2 city, we don't understand the difference between say ICICI Bank branch in Ahmedabad and ICICI Bank branch in Gandhinagar or in GIFT City, right? In a very simple language, would you like to give a perspective about what is the difference of between these two branches and what kind of services which you can offer which a normal branch in India cannot offer? And probably then we will deep dive into how we can actually use a banking facility from GIFT City for raising the capital.
Thank you, Sandeep Bhai and Padmin Bhai, for inviting me. It's a pleasure and honor to be here. I have recently moved to Ahmedabad, and I must say I love the place, I love the people here, and I find this my new home. Very good question, Sandeep Bhai. You know, what differentiates ICICI Bank branch in GMC House or Navrangpura from ICICI GIFT City? The most important thing that, you know, you mentioned, Padmin Bhai, was the fact that in GIFT City, there is no, we are exempt from FEMA. So therefore, the fundamental difference is the Ahmedabad branch deals in rupees, takes care of all your deposit, lending, trade, all your requirements, but only in rupees. So in a sense, ICICI GIFT City is the other side of the same coin, that whenever you have a need for dollars, for whatever reason, for saving, for investment, you can come to GIFT City. So that's the first and foremost important point that you have to keep in mind, that we do not deal in rupees, we deal in dollars and all other hard currencies. In fact, we deal in 10 currencies in all, from dollars, pounds, euro, Australian dollar, Singapore dollar, etc. So that's the most fundamental thing. The other thing is ICICI Bank GIFT City operates like a bank on its own. Why is that? Because I run my own balance sheet, I run my own treasury, I do my own resource raising, I do my own lending. ICICI Bank Ahmedabad is part of, say, Ahmedabad zone, Gujarat state, India. You know, that money that you raise there can be lent anywhere. You could just be raising deposits. When you raise the money, it is given to a central treasury to manage that liquidity, right? So the branch is basically more of a sales and service outfit, whereas ICICI Bank GIFT City is a full bank. It's like 100, 1000 the size of ICICI Bank as a whole, because we have a treasury, we have operations, we have trade, we have liability, we have assets, we have NRI, we have everything under one single branch. So though that is the other big thing, and therefore the range of services that you can offer as ICICI Bank GIFT City is far larger and very different. But at the same time, it complements what ICICI Bank Ahmedabad does. So if you're an SME, you're an MSME who has his current account with ICICI Bank Ahmedabad, and you have an overseas subsidy, or you have a need for foreign currency borrowing, or you have trade, then ICICI Bank Ahmedabad and GIFT City will work in tandem. So you will, and the beauty of this is that it is all in the same time zone. The same relationship manager will say, sir, you want a rupee deposit here, you want a dollar deposit, I have ICICI GIFT City. So in a sense, ICICI Bank GIFT City complements our India offerings and caters to the needs of this very same customer in currencies other than rupees. So that, Sandeep Bhai, is in a nutshell how we are different from ICICI Bank Ahmedabad branch.
So basically, it means that ICICI Bank GIFT City branch is as good as, say, ICICI Dubai branch or a Singapore branch or a London branch, right? In terms of keeping a foreign currency deposits, in terms of maintaining a dollar denominated account, or in terms of raising either capital or deploying the dollar. Basically, that's where the role of a bank in IFSC will come into play. We will discuss more in detail, but I wanted to bring out the difference very clearly, that the branch is completely different. It's a non-resident branch, and while geographically it is part of India, but for all practical reasons under the FEMA, it is more like a foreign branch, and even the Reserve Bank of India today treats that branch as at par with any other overseas branch of an Indian bank. Now, you know, the Apurvaji, I'll come to you basically, and you know, you have been traveling across the globe, you have been interacting with the various foreign investors as well. it's important that, say, when somebody is setting up a fund in Gift City, and if the fund is trying to raise money from the foreign investors, the foreign investor be comfortable investing through the Gift City because it's a new jurisdiction. People have kind of invested through Singapore or Mauritius or other jurisdictions, but this is a new jurisdiction that they are now talking where they are finding an option where they can also invest through the Gift City. Now, what kind of questions that you are seeing from those foreign investors, whether they are comfortable investing through Gift City, and what kind of differentiation that you see basically if they invest through Gift City?
Thank you, Sandeep bhai. So first thing is the questions that we have encountered so far have undergone a lot of change. 2 years back, we had to justify Gift City against maybe Mauritius or Cayman Islands as a jurisdiction. Today, most of the global investors feel that we are far better than some of those jurisdictions. So the comfort of Gift City any day is far superior than some of those age-old jurisdictions which we've used in the past. We are not too far from some of the other very well-respected regulations like Luxembourg, right, where global investors or global endowment funds have felt a lot of comfort investing with those jurisdictions. I must say that we are not too far from that as well. So from an investor's perception point of view, a lot has changed over the last 2.5 years that I have witnessed personally in my interactions. Second good thing which has happened is that the number of options which are available from the Gift City jurisdiction has also gone up in this period. This would have been a major problem if the number of options that we have would not have grown. But Gift City has not grown only in infrastructure. It has grown in terms of its offering as well. With over 100 fund management entities registered already here, you have the entire gamut of services which somebody would want to invest in. Some of the things which were more or less the missing links are also getting addressed with tokenization, what we just referred off. So with all this, and typically a global investor would look at one jurisdiction for the entire range of offerings. Otherwise, you are dividing your money into various parts which nobody would want. This has been one major advantage. Second, and there are multiple factors, but another major reason has been that India as an economy, you don't need to hard sell India any longer anywhere across in the globe now, right? Indian story is appealing enough. And it's not only about equity markets in India. It's about economy of India which is selling very easily. And as a subset of the economy, everything within the economy generally will do well. Leave aside a couple of asset classes here and there, but generally speaking, this is where the advantage is. So one, as a country, you don't have to hard sell. Second, as a jurisdiction, you don't need a hard sell because that is well accepted already. Range of offerings are pretty decent enough. And unlike some of the jurisdictions where you could have a paper company, here you need physical presence. It's not where one building will house 5,000 registered offices. It doesn't happen in Gift City. You need a principal officer, you need a compliance officer. You just can't set up business without your physical presence in Gift. With all this put together, the environment for money to come into India is much more easy. Lastly, before I sum up, there is a lot of capital which is outside of India willing to get into India. Which better gateway than Gift for that capital to come here, right? And I remember 2.5 years back when I visited, close to 3 years back when I visited Gift City for the first time. And in my building from the 16th floor, I started taking the stairs and there were only few names. Prior to that, 16 years in Mumbai, so I was coming with a Mumbai mindset. And the moment I was getting down the stairs and I see the nameplates, and I said, I see Nariman Point, Lower Parel and BKC all in this one building, right? And that was the starting point. So I said, with all the madness of Mumbai driving from one distance to the other not in kilometers but in hours, if you have everything in one building, even as a localite, this is a great place to work. Forget as a foreign investor to invest in. So with all this, where the infrastructure is supportive, economy is supportive, the range of products supportive, I don't think a global investor would miss out on Gift City opportunity ever in this scenario.
Okay. Perfect. I think that gives a lot of confidence for someone who is actually looking to raise fund or the capital basically through the GIFT IFSC, and that, as you rightly mentioned, right kind of efforts have already been put in basically to ensure that the investors are aware about GIFT City structure, they are aware about the regulations that GIFT City basically is providing for them to invest through the GIFT City. We will also come into the nitty-gritties in terms of, and as all of you know, that if you want to raise, say, a fund, there are 3-4 options. So one plain vanilla option is taking the bank loan. And in a foreign currency loan terminology that we use, when you obtain a foreign currency loan from a overseas bank, it is known as the ECB, external commercial borrowing, right? The way we take a rupee loan from a bank in India, when you take a foreign currency loan from an offshore branch, it's basically known as the ECB. Now, even today, many of you as MSMEs or SMEs, you are eligible to obtain that foreign currency loan, which Manishji will talk more in detail. There are multiple other options, like say if you are not comfortable, and if we go 25-30 years era, back to our life, when somebody was receiving the salary or the business profit, the only options that they were looking to invest into is the fixed deposits, or maybe they will buy some gold, right? But probably if you ask someone today who is earning X amount, he or she will actually invest into the equities, he or she will invest into some of the other assets, gold, future and options. So there are 7 to 8 other options where people are looking to invest into the multiple assets. On the same lines, when we are looking to raise fund or a capital, the one option, as I mentioned, is the banking loan, which is a very easy. You approach the bank based on your credibility, they will give you the loan. The second option is basically the raising the investments through the alternative investment funds. And again, we will come into detail, because if you don't want to avail a banking loan and if you don't want to pay the interest, there is an option available where you can approach the fund manager, explain your project, and if he's comfortable, if he's comfortable in terms of your ROI of your projects, the fund manager can invest into the projects. And let me tell you, this investment can be both debt and equity. It's not that they will just take away your equity. The fund manager can always also invest as a debt, as an instrument. The third option is, say, if you are big enough and if you feel that you will be able to approach investors yourself and you will be able to raise capital or debt yourself, there is an option available where you can actually list your bonds. You can raise the debt basically by issuing the bonds, and you can list those bonds on the international exchange. Now, beyond these instruments, Tusharji has come out with a very unique idea where he has actually tokenized the assets. So if I want to buy an apartment or a commercial assets, I need to have some lakhs of rupees or a crores of rupees to buy that investment, right? But he has come up with an idea where if I want to invest 50,000 rupees to buy that real estate project, you have some idea where you can raise money and invest into this projects. So if you can help us understanding in terms of your thought process, how such instruments can be created, and what has been the investor's perspective about investing into such instruments?
Sure. Thank you. First of all, thank you so much for having me here. Glad to be back to Gujarat. And IFSC or GIFT City is the reason for that, and I'm really appreciate that for you. So yes, we have been talking about multiple investment opportunities, and we always talk about equity, debt, mutual funds, and F&O. But most of us, rather, whenever we have windfalls, whichever way, we always think about buying a real estate. And that's a fact, be it an actor, a professional, or anybody else. The fact is, not everybody can afford that, nor we want to just keep on buying assets, in the sense like the asset that we buy is for consumption. The house that we buy, we feel it's an investment. The fact is, it's an investment or asset for next generation. The house that we are buying is actually a consumption for us. So for investments, we should have a different perspective. And yes, we are buying assets and there are multiple asset classes, but in India, as you have seen, we are not able to actually invest in assets like schools, universities or hospitals or clinics, while affordable houses, where actually there is a huge dearth of capital, and banks have their own restrictions to fund real estate sector. And even infrastructure in India is around 40 lakh crore, which is $4.5 trillion. The fact is, and real estate today around $220 billion is expected to be around $1 trillion by 2030. And it needs huge capital. And think about global real estate. The total valuation is around $330 trillion, while the private equity, it's like public equity, is around just $10 trillion. So 33x. While in equity or debt, the multiples are much higher. It's inversely proportional. So private capital in real estate has been much higher. And while we need to create liquidity, and REITs have been there, real estate mutual funds have been there. The fact is not, they have not been actually successful. Even in globally, REITs have started in 1960s in US. We are 63 years down the line, and it's just 1% of the global real estate valuation. So we need to create instruments, and so tokenization is like basically fractionalization of real estate. And it's represented by tokens which are unique code in electronic form. And blockchain is a very secure technology, having 16 layers of security and like 10,000 nodes. And so even if we being an independent platform, once we launch it, or the regulator, or say be it the investor or the asset holder, promoter, they can't change it. So it's safe. So it doesn't need, like currently the stock markets have depositor, and like various intermediaries and various authorities to control. Blockchain in itself can do that as a custodian and other roles as well. So beyond that, basically, an individual asset owner is not able to liquidate his assets easily. Apart from that, if you talk about small investors, we Indians invest like 20 lakh crore each year in fixed deposits. In total, like we have around 188 lakh crores in fixed deposit last year. While we are still struggling to get funding for real estate or say infrastructure, and when I talk to the pension funds or private equity funds globally, they say, Tushar, because I have managed FDI myself in India for a New York-based fund, it's easy to invest and difficult to exit. So the tokenization platform is essentially fractionalize the asset, represent the tokens on the blockchain platform, and you would not be able to just invest fractionally, you would be also able to trade, because a lot of fractional platforms are there which allow, they permit investments, or say 25 lakhs, or say another thing is you invest, they invite you, but the fact is where is the secondary exit? Nobody talks about that. But when you create an exchange, you should be able to trade, and this will not be just through GIFT City, which has been possible, is not just India or GIFT City assets, but the fact is it will be global assets which Indians can invest and global investors can invest in India and vice versa. And taking it further beyond the vision that we have, rather I would look at GIFT City as a fulcrum in the sense, why just look at India or US or other assets? We can make GIFT City in a way like from an American investor invest in Africa through GIFT City, or an Australian investor investing in Ukraine through GIFT City. And what happens in capital markets when people ask, like REITs have been there, the fact is stock markets are volatile, and real estate and gold are the instruments where people want to invest for hedging against the volatility or inflation. So we should have a separate platform, and that's what we are created. And the reason I want to have it regulated is the small investor also should have trust. Rather, there are a lot of, say, some of the tokenization platforms there in the globally, but they're unregulated. Rather, I would want to have it regulated, and with GIFT City, they understand business, so they are making it much easier, and IFSC as well has been supporting to create tech-related regulations. Considering we have 4 regulators already in India for finance, SEBI, RBI, IRDA and PFRDA. But the fintech, it's a new animal altogether, or it's a new baby, I would call it. But so we need new regulations, and GIFT City understands that. And that's where it would be a great place or great platform to open up entire sector for India and globally vis-a-vis, for various asset classes, while reducing the volatility and making it much secure to the system. Thanks.
Thanks. I think you have given a very new perspective, and I'm not sure whether you were aware about this concept, but it is actually happening now, and he has already opened that platform basically where such investments can happen. But now coming to Amber, basically, who you have done many transactions basically for MSMEs and SMEs for their debt requirements specifically. And as you know that the MSMEs and SMEs may not be well structured the way the large companies are structured today, right? While their business model is very highly potential business model, the growth is kind of it's well known, and they are aware about the market that they can capture. But in spite of that, they are still not able to get the right kind of efficient, I'll not say the funding, but the right kind of efficient funding. Because many a times even a 50 basis point reduction in the interest rate would make a lot of difference for a large loan, right? So how do what are the challenges that MSMEs and SMEs face today when they actually approach to the banks? And we have a banker here, so we can always come back to him again in terms of the challenges that MSMEs are facing and how banks can help them to address it. But your thoughts, and probably we will try to see how can we address it through the GIFT City structures.
Thanks Sandeep ji for the question. Thanks AMA for inviting me here. This is sir a kind of a very relevant question what we are seeing and facing as of now. I will just want to just give you some statistics about it. So in India, as of now, around the SMEs and MSMEs contribute around 25 to 30% of the GDP, whereas the same figure in US and China is around 60% kind of. If someone can just give me a blind bet and say that what would be a difference of this 30 and 60%. So India and SMEs contribute around 30% GDP, and US and China around 60% of the SMEs contribute to the GDP. Any specific answer that someone can give me? That what may be the reason of this difference? Anyone, just a blind bet? Yes, sir.
Lack of enough fund for them to scale up.
Definitely, exactly this is the point. The two key reasons that have been identified by the analysts are the access to funds, that is capital, and second is technology. So these are the two key reasons that if in case you want to make the country that as if now we are a 3.7 trillion economy, our Honorable Prime Minister is aiming for 5 trillion and $10 trillion economy. The only way to go to these numbers is access to capital. Access to capital doesn't mean that at any cost. It has to be at right time and at the right cost. What we have seen is generally that SMEs, MSMEs who are like a new entrepreneurs who are coming in the business, who are in their scalable mode, who are expanding their businesses. The key challenge that primarily they face is the lack of collaterals. So if in case, say I want to raise a fund of 20 CR or 25 or 30 CR, I would not be having a 20-30 CR of collateral in my business to offer to the banks or the lenders. So now what options I have? One option is I come down on my aspirations, I come down on my future expansions, or I try to search for a capital that can offer me a higher amount on a low value of my collaterals. So this is the one challenge that we see, that there is a lack of collaterals. Second, if I say that I aspire, so generally what banks and the lenders see in any of the SMEs and MSMEs transactions is, they will fund you basis your past performance, and to somewhat extent they will take care of your future aspirations. But if in case I see that I have various opportunity in my business, I know that if I get the right amount of capital at right cost, I will be able to scale up the way that I want and not the way the bank sees it. So this is a second kind of issue, like the shortage of funds. And if, let's say I tick the both points, maybe having the right collateral in hand, so maybe I would be a wealthy person and I would be having a right collateral. I would be having a right vision, but due to some financial mismatch, because this SMEs and MSCs are in their initial stages of business. So there are high chances that the financials are not managed the way that banks would like to see it. So now the third issue comes is they are prone to high rate of interest. So this is the third challenge that comes. But yeah, thanks to GIFT City, that now if in case you are a net exporter, when I say net exporter means if I let's say export 100 rupees and I import let's say 40 rupees, so I am a net exporter to the extent of 60 rupees. So Gift City has an option wherein you can get the funds in dollar denominated loans considering your net exports. So what will happen through this is, for example, in an Indian INR rupees you are taking borrowing at let's say 9% or 10% kind of, the same interest gets reduced by 2 to 3 basis points, 2 to 3 percentage points considering the SOFR and the LIBOR markets. So this is the fourth scenario wherein we can help the SMEs and MSMEs raise fund from the Gift City option. And the last option is the last challenge that what we have seen is the awareness part. So recently government has come up with a various sort of alternative sources like you can get the funds via subsidies options. So if in case I am setting up a project in maybe India, so government has a option wherein they offer at a capital subsidies and interest subsidies. And this interest subsidies are like you can reduce your cost to 50% of your interest cost. So if in case I raise funds at 9.5 to 10%, there are government subsidies of interest wherein they are offering 4 to 5% of the subsidies. So your interest cost, effectively interest cost comes only 4 to 5%. But there has been an awareness issue that we are seeing. So just to give an example, one of our clients who was setting up a logistics park in Ahmedabad, he was having set up a very high value of logistics park that what he is setting up. He already have done 3 warehouses. So there is a policy of government wherein from the day you start setting up your logistic park, if you apply to the government that I am setting up a logistics park and if you come in that particular criteria, there is a 25% capital subsidy from government to the extent of 15 CR. So if in case I am setting up maybe a logistic park at a cost, a warehouse at a cost of 30-40 CR and I am getting a subsidy of 7.5 to 8 crores, that is a huge amount. This is what the government is offering. Other than this, there are interest subsidies which are attached to it. So what I can, if I just want to sum it up, the key challenges and the solutions for it, one is the collaterals, second is getting the fund for your future expansion, considering my past performance, third is if in case I have some collateral or some financial mismanagement issue, I am prone to high interest rates, and fourth is access to the right resources what government is offering. So yeah, thanks sir.
No, very important. I think collateral is something which is one of the major issue, and I think while banks, they are right from their perspective because they have seen the past examples and they are and also basically more from their internal policies and also from the RBI's regulations perspective. They need to be kind of well assured about the available collaterals, but probably I think there are certain ways under which some of this can be resolved. But Manishji, I'll come back to you. Within the IFSC banking units, we have seen 2-3 very important products which MSMEs and SMEs can take it very efficiently. So the one is the ECB, and we talked about the foreign currency loan. The second is about the trade finance. Probably many institutions which are into the import and export of business, trade finance play a very important role, and probably you can help us understand them, how IBU can help them for the trade finance related services. And the third, which is part of trade finance, but the factoring is something which many institutions are still not using it efficiently. And we have seen the ITFS kind of platform also in Gift City. So very briefly, if you can help us understand those products and how companies can actually efficiently use these products for their capital and fundraising as well as reducing their the interest cost.
Thank you, Sandeep bhai. So rightly said, so we'll cover 3 areas, ECBs, long-term currency borrowing, foreign currency borrowings, trade finance, and specific product in trade finance, which is factoring. Now, ECBs is nothing, like you rightly said earlier, Sandeep bhai, it is nothing but instead of taking a rupee term loan, taking a term loan in US dollars. Now, we are constrained in most things. We cannot deal with resident Indians. As a resident company, you cannot open an account with us. I can't give you a loan for just anything. But specific areas such as long-term currency, foreign currency lending under ECB guidelines of RBI can be given. We used to give it earlier from ICICI Bank Singapore, Bahrain. But today, a far more efficient way to give this loan is through ICICI Bank Gift City. And why do I say it's efficient? It's in the same time zone. If the loan is small enough, we can do it at a far lower cost in terms of legal cost, because we can do the documentation under legal law rather than under English law, and we all know the costs of that. Third thing, there is no withholding tax. So when you take a loan from Singapore or Bahrain, etc., other countries, there is a withholding tax. But since we are in the same tax jurisdiction, ICICI Bank Gift City, as well as the borrower, there is no withholding tax. You know, the time zone being the same, etc., all of those are important things. But ECBs, therefore, is a very, very efficient way for mid-sized and small, even small companies to raise funding. Of course, there is the issue of, you know, their credit worthiness. We as banks, we as ICICI Bank believe have two fundamental principles, that return of capital is more important than return on capital. Yes, really, we've as you rightly said, we burnt our fingers in the past. We are very conservative. We do not want very high interest rates. We will give very fine interest rates, but we will cherry pick the credit that we take. The other principle is, when we give money and we assess a borrower, we look at two very, very important things. We look at identifiability and accessibility, right? How identifiable is this person? God forbid if something goes wrong, can I go back? Can I find him? Can I locate him? How well can I assess his ability? And assessment in banking is not just your ability to pay, it is also your willingness to pay, right? So I'm just combining a few things. So return of capital is more important than return on capital. Your identifiability and accessibility, and your willingness and ability to pay. But yes, all of that given, we can give very, very competitively priced long-term currency loans, and in a scenario where we expect interest rates to come down over the next 6 to 12 months, that will get even better and better. In addition, we give you a lot of risk management tools for you to hedge your risk. As you rightly said, Amber, that, you know, if you have net exports, maybe you don't need to swap all the way into currency, but you want to get rid of your interest rate risk at least. So you just swap the interest rate piece. So all of that we can help you out of Gift City. The second piece of trade finance, again, many of you as exporters, importers, I will not bore you with a lot of details. I can share, you know, you can go to our website, see, you know, as an importer, we can give you products such as buyer's credit, we can give you RA financing, all of which help you, you know, defer your repayment of, supposing your LC is falling due and your goods are not yet liquidated, you can extend that by taking a SBLC from your bank, and we can provide you a buyer's credit against that, which will extend your period for another 90 to 180 days. Similarly, RA financing, you can go back to your exporter and say, you know, I'm going to issue this usance LC, but I can get you the funds, let's say it's a 180-day usance LC, but I can get this assigned to my ICICI Bank Gift City branch, which will give you the funds upfront within 30 to 60 days. And in exchange for that, you have to give me credit. So you may end up paying something for, say, 3-4% for this, but if you're getting an 8-10% discount, that always makes sense, right? So trade finance, it's very useful for you to make use of someone like a Gift City to lower your cost of funds and improve your bargaining with your counterparty. Factoring is a relatively new thing that we're doing, and as Sandeep Bhai rightly said, we are participating under the auspices of Gift City and IFSCA in what we call a sandbox project. There are ITFS, International Trade Financial Services platforms such as Vayana, etc. We are working with them where they are onboarding importers and exporters, and we are able to, you know, get the exporter can assign the receivables to us in an off-balance sheet manner, raise funding which is not debt creating. We take a risk on the importer or the importer's bank, and, you know, it's a happy situation for the exporter here, because he has got the money up front without creating any debt. He assigns the receivables to me. I am taking a risk on the counterparty, which is a financial entity, and this platform in between is helping in smoothing the entire process, doing the documentation, and acting as a kind of exchange for this, you know, information exchange and flow. So that's really in a nutshell. Sandeep, I hope I've answered all three of your queries.
No, so I think, as I mentioned, the factoring and the trade finance platform is quite interesting. I'll just give you a small example. Say if you're a bills receivable basically, which is where you need to receive say 10 lakhs rupees. I'm just quoting in a rupee terms right now, after 3 months. Now say if you want to kind of, get that money basically early, you can't wait for the 3 months. You can actually place that bill on the ITFS platform, and somebody like a lender like ICICI Bank can do the bill discounting of that bill, and instead of that, after 3 months they can actually pay you well in advance, and the bank will take the risk of getting that money after the 3 months. They will charge depending on their business model, basically either through some interest or some cost, but it will give you an ability to receive that money on the very day one, instead of waiting for the 3 months to receive it from the your vendor or your basically the kind of exporter overseas. So it's a very interesting model where all of you can actually become part of this platform, provided your invoice is in dollar terms. So if it is a dollar receivable, then you can do it through this platform even today. Apurvaji, banker mentioned that for them the capital return of capital is important. So they are by nature bankers are conservative in terms of where the money is landed. But I believe the alternative investment funds are more risk takers, and probably they would also look for where the returns are higher, right?
Correct.
And many a times the projects that many of the companies are looking for, those are high risk in nature. The returns are not very clear whether the project will be viable after 2 years, 3 years and 5 years. And that's where sometimes the banks are not comfortable lending to such projects. But the apps will be very much comfortable looking at these projects.
Correct.
And I'm sure you have done many such transactions in past. The question number one, how some of these projects or some of these companies can connect to because we know that the funding is available through apps, but we don't know how to connect with them, how to reach out them, and what kind of projects they can finance, whether they can only invest in equities or they can also invest into the debt projects. And the second, the companies like yours, FinnoSolution, can you also help basically in terms of analyzing the projects, creating that a bridge between the investors and the project, through the IFSC?
Thank you, Sandeep bhai. But first of all, we have a lot of contrast between me and Manish. Yes, return on capital, return off capital, absolutely agreed. No questions on this part, rightfully. See the way, these are two separate sides of balance sheets that we are talking about, right? The one who needs borrowing will come to a bank for a certain reasons. We largely deal with people who have surpluses for them to invest in. So to that extent, we're completely different on the side of the balance sheet. One thing is for sure, that there is capital for all kinds of risk which is available. You come across people who say, I want to invest only in US treasuries, right? And they believe that anything other than US treasury is risky. And then there is someone who says that what's the use of investment if it doesn't fetch me 24% dollar returns? Both are right in their own way. It is the respective investor's risk profile that prevails. I am not the one who can decide the risk profile of the investor. So the first thing is, do we as a platform have something right from the safest or the perceived safest investment to a riskier asset class? And let me also tell you, when I use the word 24% as a reference number, we have come across people saying 60% dollar returns if it's available. So we have all kinds of investors, whether it's India or abroad, right? So for every risk profile, this works. Now, question is, if the project is not bankable by a bank, is alternate investment an option? It could be for few people, it could not be for few. So if I look at an overall percentage, there could be about 10% of the universe that we know of which would not mind taking a certain kind of risk. Generally speaking, to answer part of the second question also, Sandeep bhai, those kind of investors are so large in nature that they generally prefer the entire due diligence on the project to be done by them only. They wouldn't want us to be outsourced to. they would not trust an external agency for profiling their risk profile and come out and invest in fund. But we are seeing another trend, and it's not only for GIFT City, but we are seeing this trend across in the SEBI regime as well. Somebody who has usual businesses internationally have developed international connects which are decent enough. So if I am one of those business houses and I feel, let me take an example of real estate to make it even more simpler. We have come across recently a lot of people with strong real estate background and they said we want to come out with an AIF of our own. Earlier, AIF definition was it is a nice way of having collective investment mechanism where investors in ticket sizes of 1 crore or a little higher will come in, invest, pool the money, and then the assets will be deployed into. We have started seeing a lot of people who come and say that we have captive base of investors who have been investing through some structures into ever India real estate projects. Those NRIs, can we create an AIF vehicle and get that money here? So if I look at the alternate investment funds which were being created till some time back, as a manager, my language would be that I'm launching my first fund, which is a 250 crore fund size. The next fund, 1,000 crore fund size. Today, you have people who come back and say that we would not mind doing a first one for 30, 40 crores or a 50 crores. So we started seeing fund sizes becoming smaller and the count increasing much more. Now, if I have to raise that 30, 40, 50 crores of money, I might not need anyone else. My overseas connects are good enough to give me that kind of money. Because capital is available outside, which is much more easy and in ample quantum, I wouldn't mind creating an AIF of my own for my own captive audience. And all that I need is few investors. I will never have one investor, right? So I comply to the AIF regulations in terms of number of investors, and I still manage my money management very easily. So we are seeing a lot of these changes. Particularly last 1 year has been very interesting when we look at these kind of data. But to a large extent, alternate investment funds have become solutions to a lot of these problems for the common people here. Whether you borrow money from India or whether you get the money from outside, either ways.
Thank you. I think it's a very, again, a new perspective. Say, if you are planning 50 to 60 crore projects within India, and if you are confident that the project is going to generate good amount of return, and you don't want to go through a debt kind of a funding where, paying interest may give you a kind of a, it will not give you a viability in the initial years. Very important suggestion that he has given that, if you are well connected with the global investors community, you yourself can actually think of setting up a fund, raise the money, and then invest yourself into some of the projects that you are actually looking for. And I think it's something that the new trend which we are seeing, and many non-financial entities are also now looking to set up funds basically to fund their own projects. Amber, I think you very well highlighted challenges of the MSMEs and SMEs, and probably, and those challenges are real in nature basically, because today most of these MSMEs are facing these challenges in terms of availing the financing. Say if I want to buy an insurance policy, I can go to a website, I will put my requirements and I will find the best quote available. Here, say if the one quote is 1,800 and the second quote is 2,000, I can actually get the best comparison and get that insurance policy. But in terms of the banking loan, the only expectation today by the SME is that kaise bhi karke mujhe wo fund dila do, and they are not looking at the other benefits or the aspects related to availing that fund. Now, can you help us understanding what can be the comparison factors when the SMEs or MSMEs are going for a banking loan or a fund? What are the factors that they should actually look at, and the kind of, and how it would actually benefit in terms of reducing their interest cost going forward basically?
Sure, sir. So, as regard as like Manish said, the point every lender or any investor, even though it's the lowest risky option or the highest risky option, maybe 8-9% is also lenders available, and also there is a set of people who are willing to give at 20-24%, and there are people who are willing to take at that. But from all the lenses, be it 8%, 9% to 20 or 30% kind of returns that any investor or lender expects, the lenses are almost the same. The first bet is always on the jockey, not the horse. So basically on the promoter. Anyone who wants to invest or lend to any promoter or any businesses, the first they will see is that what is this promoter is all about. What is the background that he is carrying? What is the qualification that he is carrying, or even though qualification is not relevant, what is the experience that he is carrying? Second would definitely the credit history. So if in case he would have taken loans in past, how he has behaved in that. Third, when it comes to would be the business model or the financials of the firm, means that how he is managing his daily cash inflows and outflows. We have seen balance sheets wherein the promoters are superb, the business is superb, the sector is great, but as they are chasing growth, the compliance and accountancies go for a toss. When I say this, that means maybe I would be high on my short-term liabilities and I will be very low on my short-term assets. Means if in case I have a few liabilities due on next 12 months, against which I don't have sufficient cash flows available. So there has to be a tailored, customized solution for each and every businesses. There cannot be a fixed product for each business, because if someone is setting up and doing the business, it's not for some sake of doing it, it's for earning profits. But this profit comes at some cost. So if in case the businesses are tailored, or in fact the lending, like sir said of AIF, if in case I see that this business will generate profit in some later span of time, so the traditional banking asset will not be a ideal model for this customer, because there are some chances that he will get he will face an issue of greening of his finances, wherein I say greening means he will take loans to repay the loans. But if I see that in maybe some span of 3 to 5 years, this project will start generating cash flows, then alternate way of raising funds would be a best option for him. But if the promoter or the entrepreneur is confident that and every year I will get the cash flows generated, so then traditional banking lending option is much better option, considering the cost of fund is concerned. So what I see is there cannot be a fixed product for each and every businesses. There has to be a tailored and customized solution for each and every businesses, considering your risk appetite, considering your nature of business, and considering your sector in which you are working. So this is the one thing that I will definitely say, that there has to be a tailored solution for each and every businesses. And then if the business is basic if you raise fund basic your businesses, accordingly the cash flows and the businesses will get managed. We have seen cases wherein, I will just give an example. So there was a client who was into food processing business. He wanted to do an expansion of 20-30 crores because there was a need of an hour in the business, because if he doesn't do the expansion, the business would have been gone for a toss. So he thought of, because of the lack of availability of the collateral, there was some short-term mismatch in the balance sheet of the long-term and short-term mismatch. The short-term liabilities were very high as considering the short-term assets. So the banks were very reluctant in lending to this particular client. So the only option left for him was diluting the equity. So he was diluting around 20-25% of the equity to raise these funds. Fortunately, we discussed, we structured the balance sheet and we structured the financials as well. So structured, when I say, means the fundraising was also structured in a manner that it was linked to the cash flows and not to the ideal banking scenarios. There was one lender who was willing to lend and at very competitive rate of interest. Luckily, the transactions got closed, and today in span of 1.5 years, the same client is now getting around 3x valuation what he was getting earlier. He got saved from diluting his equity, and now he is at a very comfortable position that if he dilutes now, he will be able to repay the debts, and also this excess fund will be used for his future expansion. So my urge is to each and everyone sitting here and maybe who would be advising their clients, that we have to go on a model of tailored customized solution for any of the fundraising facilities, so that your cash inflows and cash outflows are matched considering the risk appetite of the investor or the lender. Yeah.
No, I think this actually gives the right message that equity is costly. You know, sometimes you find it very easy that giving equity will give you a very easy fund, but equity is more costlier always than the debt. Absolutely, correct. So I think probably we are already 1 hour basically, you know, from our session. But what we can do, we can take with the permission of Padminji, we can have couple of questions, and off the line we can discuss more in detail.
Yeah, thank you. I was, because that was my role. But thank you so much. No, because there is such a wealth of information and a rich experience of all of them. And when Sandeep Bhai being the main coordinator, so this can never stop, so to say. But I think this is a start. And as one of them say, no, awareness is so important. We are just starting to know what is the GIFT Center and how much it can offer. So we'll continue this kind of dialogue and but yes, we'll definitely like to have a couple of questions from the audience, if you have any. Yeah, you can identify yourself, and if you have question for any specific gentleman here, you can say so. If it's a general question, you can ask.
Hello, hello. Yeah, myself Prem Narayan Tripathi. I'm practicing company secretary. So I have a question with regard to this tokenization that you mentioned. So whether this token is a financial product or a security defined under IFSC, or still it is to be defined. So just like shares and like debentures, it is being traded. But whether this token already has been approved or it is in the process or in the pipeline.
Yeah, thanks for raising that. Actually, see, tokenization can be done of the asset. People are doing it like even square footage of the, and say they are selling tokens of square feet as well, and it could be done of securities as well. So it could be commoditized, or it could be like a security as well. And the fact is, I had written a white paper on this, and having submitted to the PMO, Finance Ministry, SEBI chair, and finally to the IFSC and GIFT City. So an asset tokenization committee has been formed at IFSCA, and they are working on it. Then the goal is to have tokenization as a financial product, just like equity, debt, FNO, other products are there, because it's a secure way of doing things. And the fact is, like as Mr. Apurva mentioned about AIF as well, a lot of people in the US, because of the 401k, they invest in syndicates in real estate, and AIF as well. What happens is, down the line, like they need money, but they are not able to exit. So well, in tokenization, you should be able to have a secondary transaction or secondary exits as well, and tertiary transactions as well. So fact is, globally it's growing, and with IFSCA they are given us a conditional approval, and we are working on it. While as a financial product it should work, because we have been working with Finance Ministry and IFSCA, and of course because of the elections and all, and as you might have read in Economic Times a few days ago, digitization of land records is already happening. And earlier it was like we have presumptive title, it should become a definitive title for title insurance as well. So from the origin of the title till the trading of tokens, that would make it much easier. So the government is pro blockchain, but government may not be pro crypto, which is fine. No government will allow another currency, which is fine. But blockchain in itself makes it a much secure product, the technology to create various products. And it could be debt, it could be quasi-debt, quasi-equity, equity in various forms. And it need not be like a portfolio of assets in REITs. It could be just individual asset. And it could be local, domestic, and there are various ways of financial structuring in a legally and ethical way. And where GIFT City, that's why I could do it in an unregulated way. But the reason is, when you reach out to the more, you are able to reach out to more customers. Like in India, with Jan Dhan Yojana, when it was ridiculed, within a year, like it was a bank account opening, as you know, for poorest of the poor, below poverty line, and it accumulated 2 lakh crores in 1 year. Imagine the way we can do that, and if that capital is used for productive purposes for emerging India, where we could be, and over and above that, we could raise debt and foreign capital on that, right? And this is not just for India, this could be global, but if the GIFT City is there, the kind of, even if it's a 0.1% or 0.01% transaction fee, or, the state governments would also make money, The central government also make money from the transaction tax and other taxes as well.
Okay, thank
Okay,
you.
thank you.
So I think it's better,
Hello.
it would be better
Hello.
than equity.
Let's
right?
have somebody else ask the
Okay.
question. Yeah, the last one, somebody here. The last question, okay. Like to have mic, please?
Yes, yes.
Yeah.
और वो कैसे एग्जैक्टली गिफ्ट सिटी में हम एक्सप्लोर कर सकते हैं, तो
Sure.
वो जानना है.
So, yeah, as you rightly mentioned, there is a platform called ITFS, which is basically the trade discounting, bill discounting platform. In India, it is known as, some of these platforms are known as, say, trades, which are registered today with RBI, and they are also operating for your rupee denominated bills. You can do that bill discounting through trades platform. On the same line, these ITFS platforms are like a company registered with the IFSC authority operating in GIFT City, where as the kind of you can register basically for your bills basically to be discounted, and the lenders can also register who is ready to participate in that transaction.
Thank you.
Right, thank you. I think we already have the time limit. Thank you so much.
But if Padminji, if you can give me 1 minute.
Of course, you all the right.
Satyendra ji is here, and I think he's the one who has brought many insurance and insurance companies. While we talked about funding and financing, probably in the trade finance transaction, insurance also plays very important role. And today, couple of life insurance companies and the reinsurance companies are becoming part of the zone today. Satyendra ji, briefly, because many of them are also into the transaction in a way, they will need a dollar denominated insurance for their export transactions. So how IFSC based insurance companies can actually facilitate such transactions basically?
Yeah, so thank you, Sandeep bhai. In fact, I was going to pick up the mic to be the third person. It's a very important day today. The RBI has notified the direct listing regulations as well, right? They have made the amendments in the FEMA to facilitate the the direct listing. But on the trade credit insurance part, so there are non-life companies, so like general insurance companies, that would offer trade credit insurance to the sellers, buyers and sellers who have who get into trade obligations cross borders. So if you have if you're importing something or if you're exporting something, I mean not importing so much, but if you're exporting something and if you are availing trade credit facilities, the entities that are offering you trade credit facilities, they could take trade credit insurance. So trade credit insurance is a major tool to facilitate working capital in a way for many entities that are into trade transactions. And in addition to that, because we are I'm a lawyer, and I remember around 5-6 years back when we used to interact with many entities who were offering very innovative trade finance solutions. Because of the existence of FEMA, many of those transactions could not take place. So there are many entities in Ahmedabad, in India, that have to use their Dubai and Singapore subsidiaries to undertake those transactions. Now, not any longer, because now you can use platforms, the ITFS platforms that exist in IFSC, to have those innovative trade finance related solutions because there is no exchange control legislation.
Right on. Thank you so much. Thanks for pointing out this. Before I say final word of thanks, I would like to request all of you that there is a feedback form given to them. Okay, so please fill out the feedback form. We at AMA are really looking forward to your feedback, because we want you to keep on coming and giving us suggestions, and you can keep the feedback form either here or in the AMA office. Plus, do spare some time, 2 minutes, to fill up the feedback form. Okay, thank you all of you once again. Now the kind of because these are the finance people, we keep on talking about ROIs. The investment you all have made in terms of coming here, I am going to say is going to pay back like anything. The return of investment is going to be much big. And of course, I must thank all of you to invest your time here. It is not easy to come out, all the senior professionals, Mr. Apurva, Mr. Manish, Dr. Tushar, and of course Amber, and above all Sandeep Bhai, and of course the team of GIFT City, all of you being here, sharing your experience. This is a one of a kind of session to start with. It's a different kind of session, and I'm happy that all of you also were here. And we are going to continue this with Sandeep Bhai and GIFT City. We are going to continue this exercise in some form or other, because this is, as everybody said, something unique is happening. Is already, and it is going to be much bigger and bigger. So thank you all of you. Keep coming to AMA. Fine. Thank you so much here.